How does Pag Ibig's MP2 fare in times of crisis? How does Pag Ibig's MP2 fare when the market is crashing? If you want to know more about the advantages of Pag Ibig's MP2, especially when the market is declining, you have to check this video out. Hi everyone, this is Marvin Germon. If you're new to this channel, please subscribe and smash that bell so you get updated every time I come up with new content about investing, about the stock market. We just breached the 90,000 subscriber mark. We're very, very close to 100,000, so thank you so much. But that's a dream, that's a desire. No, I really want to see more and more and more Filipinos educated properly. And it's nice to see that we're closing into 100,000 strong. It's a dream to have 100,000 Filipinos interested about the market, interested about investing, because we get to actually see that hey, there's a greater amount of interest for people to invest, and that's something that's so amazing. That's why I keep making videos like this, because I just really want to see more and more Filipinos be financially free. So what are you waiting for? Subscribe, hit the bell, and this video we're gonna talk about MP2. Enjoy the rest of the video. So if you've been following and watching the markets over the past few days, you've seen larger drops, not just in the Philippine market. I created a video just prior to this. It got uploaded around lunchtime, where I showed global markets start to drop, where I showed not just the Philippine market, but you see a lot of the global indices started to go down. Now, I also mentioned in that video that in times of uncertainty, gold is amazing. In times of uncertainty, you see the difference of their movements. You see global stock markets go down, but you see the price of gold, regardless if it's a gold bar, a gold CFD, or you buying a gold ETF, you see the difference on their correlation. You see gold prices start to go up. Why? Because in times of uncertainty, that's where you see tangible assets like gold, which is valued like a currency, also start to go up. Because as you all know, it's all about supply and demand. When stocks go down, a lot of people out of fear will sell. A lot of people who buy mutual funds will also sell, and then people will have to pull out, and you see it go down and start crash down. But a ton of gold will still be a ton of gold. Gold is considered a safe haven. Now, how does that connect to Pag Ibig's MP2, and what does that have to do in the grand scheme of things? Here's the thing. Since the market was down last year, Pag Ibig's MP2, Pag Ibig MP2 7+% dividends actually beat the index altogether. Meaning, while the index was negative, those who invested in Pag Ibig's MP2 made money. And I've been saying this over and over and over again. The biggest advantage of Pag Ibig's MP2 is that it's also tax-free, and it protects people that if you're a person who does not like volatility, if you're a person that you are okay not earning a lot of money, but you are okay also that if you place 100,000 pesos, you have something at the back of your head saying that, hey, I placed 100,000 pesos, but I have this ideology that it won't go lower than 100,000 pesos. Then Pag Ibig MP2 is for you. That's what I've been saying all the time. So how does Pag Ibig MP2 fare? Those who are investing in Pag Ibig MP2 and those who plan to invest in Pag Ibig MP2, you will be spared from the volatility. You will be spared from the markets, the swings of the market. You will be spared from the emotional upward and downward pull of it, as you see the market still continue its downward move. So, will Pag Ibig MP2 be safe? I believe so. As long as, of course, you have to understand this, that it has no economic impact, that the downward move on the market has no economic impact on people's ability to get houses. Please remember, your capital is guaranteed. The money that you put in is guaranteed, but your earnings are not. Meaning, the earnings that they give out are still dividends. Meaning, if a lot of people don't take out loans because they're also scared about what's happening, or siguro a recession will happen, some people lose their jobs, they won't be able to, there won't be an expectation for them that I'll get a house, because people won't get houses if they don't have good employment. People won't get houses if the money that they're getting on a monthly basis is not too big. So the risk there that I can only see is basically this. Number one, if the consumption, the uptake for getting houses starts to dwindle down, meaning there will be lesser people taking out loans, then, and specifically taking out loans from Pag Ibig, then the dividends might be lower also. You have to remember, the dividends is a byproduct of how many people take out loans. The dividends is a byproduct of how many people borrow money. So if the market drops because of fears of NCOV, but it doesn't really have a direct impact on people buying houses, because please remember, in 2020, we still have a backlog in houses. Not every Filipino has a house yet. A majority still of Filipinos are still either living with relatives or are renting out. So that backlog is what Pag-ibig is trying to address. That's why it's called socialized housing. So what can you expect? You can expect during bear markets, you can expect during drops, you won't have volatility. Your capital will be pretty much intact. And number two is this: you will still have earnings, but on good times where there's a lot of people borrowing, you can expect your dividends to be relatively higher. But if the borrowing becomes lesser, you can also expect it to be lower as well. So it's not particularly immune to what's happening, because you have to understand this. Everything that happens in the Philippine economy affects us all, good or bad. There will be some winners and there will be some losers as well. So just to put this into full circle, what I want to suggest to all of you is this: if you have money and you don't want the volatility of the markets, you don't want the uncertainty of not knowing where it's headed, you don't want the uncertainty that, hey, I don't know what's gonna happen to the market 6 months from now, 9 months from now, and I don't want to see my capital go down, then by all means go to MP2. MP2 will give you that fixed rate of return when the market is battered. MP2 will give you that assurance at the back of your head that your capital will never go lower than the amount you actually put in. But hey, since I'm a stock market guy, I want to share this also. If you're just starting out and you feel that the market has volatility, I'd still implore you to invest in the market, especially if you have money that you don't plan to touch for a very, very long period of time. Meaning, you have money right now that same period as MP2 that here's what I don't understand nga sa market eh. For people who invest in MP2, they're okay to put in the money. Then, after 5 years, regardless of what happens, that's when they'll only look at it. But for the market, when people put money in there after 2 days, they get also rattled down. My suggestion to you is this: invest in MP2, but there's a thing that we call diversification. Diversification is you putting in money on things that are unrelated investments. And MP2 and the stock market they're both paper assets, but they're not really related to each other. So my suggestion is, if you love MP2 so much and you don't want volatility, put more there, but try to allocate a small amount, a small portion of your investable funds in the stock market. Why? Because we're literally down almost more than 20%, close to 25% na nga, depending on the stock that you are looking at. And some of them have dropped, not just primarily because the business is bad, but primarily because there's a lot of fear. And as you all know, I've been saying this in the different videos, markets drop when there's more people selling. When more people are selling, regardless of how good the company is, it will always drop, because it's all about supply and demand. And some of them have dropped because a lot of people are just selling. My suggestion to you is this: find those stocks that are really good, that have been massively battered, and you are an investor, not a trader. Allocate a specific amount there and go back to that stock 5 years from now. Treat it like an MP2. By the time you come back 5 years from now, I really believe this, that it would be in a better position. But not just that, especially if the stock that you're buying has dividends, especially if the stock that you're buying has a dividend yield that's decent and could be bonds, then you have two types of earnings. Number one, because you bought when there's a lot of uncertainty, because you bought when there's a lot of fear. 5 years from now, you will have capital appreciation. That's one. Number two is this: the dividends that you will get every year is your compensation, that while you're waiting it out for the capital appreciation to happen, you get earnings as well. So it's a proxy to what MP2 is giving, where it's giving you dividends, but this time you have a chance of a bigger capital appreciation. So why am I saying this? With the exception of a few stocks, majority of the stocks will give you lower dividend yield than MP2. However, that's okay if your ultimate end goal 5 years from now is capital appreciation from the stocks that you're buying. And I'll tell you this, the reason why I'm sharing this to you is that since the market is down and you are a very, very long-term investor, that you don't care what will happen to the stock 2 months from now, what will happen to the stock 4 months from now, what will happen to the stock 6 weeks from now, this is a good time for you to position. But please remember this, don't position blindly. Don't just position just because I say it. I always tell this to a lot of people. Take the time to study, take the time to research, take the time to know what you're getting into. You need to have a full conviction, especially if this is a stock market. You need to have full conviction of what you are buying. You need to have full conviction that this is a stock that you want to buy. But I've been saying this over and over in a lot of the videos. Also, if you don't have time, just buy the index fund. I really believe this. Since the index is now down from please remember, the Philippine Stock Exchange Index 2 years ago was around 9,000 pesos. 9,000. It's now around 6,800 from in the making of this video. So it's literally massive. Not 2008 crash levels down, but it's down a considerable level already. So if it goes back to from 6,800 to 9,000, then you also have a decent gain. Also, it's something that I believe could beat time deposits. It's something that I believe could beat bonds. And if it goes back from 6,800 to 9,000 in less than 5 years, then it will beat for sure MP2 as well. So that's how you consider it. You always be invested. You always spend the time to invest. You always take the time to allocate capital to invest. You always spend the time to allocate capital and put it in capital markets. So again, just to recap, if you're a person who doesn't have the time, or you're a person who's very, very scared, put in MP2, put a large chunk in MP2, but diversify index funds or stocks that give you dividends but are still growing, that are massively better. There's so much to choose from right now. If you want to know more about that, check my other videos where I talked about the fundamentals of a company, because that's very, very important, especially in times like this. You want to find companies whose fundamentals are very, very good. You want to find companies whose fundamentals are very, very strong, because in times of uncertainty, it's the fundamentals of the business that will carry it through as well. So I guess that's it. I'll just end this video inviting you, for those who want to learn more about the stock market in a classroom level setting. I have links below for my stock market courses in different cities around the world. We have stock market courses in Manila this March. Then we have another one in London this April 2020. Then in May, it will be in Singapore and Doha, Qatar. Then in June, we will be in Auckland, New Zealand. Then July, we will be in Sydney, Australia. Then November, we will be in Tokyo and Dubai as well. So all of those details are in the description below. The topics will vary per city, but basically, it's all about finding the best time to come in and out of a stock. We're going to talk about that. Then it's also going to talk about how do you find which is a good company, which is a bad one. How do you determine which company is actually cheap and which company is actually expensive? That's what we're going to talk about there as well. And then for those who want to learn the basics, as in not specifically timing the markets, not specifically stock picking, the basics of the markets, I have 2 online courses naman where you can do anywhere. It's an online course with Chinkitan. It's called Stock Market for Everyone. The link is down below. It's a Tagalog stock market basic course. And for those who want to learn more how to do business, how to be an entrepreneur, how to start investing in the stock market, I have another online course with Sean C. It's called Make Money, Grow Money. It will teach you about the basics of business and the basics of investing. And lastly, I say this all the time, some people like consuming content, learning via books. I have books in the description below that you can order via Shopee. I hope that you get a lot from all of that, because that's those are things that I wrote with you in mind, giving you insights on the basics of the market, investing and trading as well. So I guess that's it for now. We're at the tail end of the video. Please comment below if you still stayed. I really hope that the videos that I make is something that gives you tremendous value. But I'll say this over and over again. You can never go wrong when you invest. You can never go wrong when you start putting your dreams first. I'd rather lose money in investing than lose money buying something that I don't need. And that was my mentality when I was starting out. I skipped off buying gadgets when I was starting out to invest my money first, so that money that I used to invest allowed me to buy the things that I want to buy today as well. So that's just about it. Winning is always about delayed gratification. Winning is always about deferring some of the stuff that makes you feel good today, so that later on you can do it for the rest of your life. And I'll say this again, 5 to 7 years of working hard, hustling, saving, spending less, leveraging, investing could lead to a lifetime of prosperity. that works. It happens. It's not. That's why you don't need to compare yourself with other people. You don't need to run the race that other people are running. You just have to do. You just have to do what works for you. You just have to do what makes you feel alive. Because at the end of the day, you're not accountable to what other strangers are. You're just accountable to yourself. You're just accountable to people that matter to you. You're just accountable to your family. You're just accountable to the dreams that you have. And this is what I know. Winners don't blame other people. They take responsibility. So if you make a mistake, own up to it, push forward, uh, learn from that mistake, tweak it, and try to find out how you can be better off of that, how that mistake can elevate you to something that's better. Don't blame it on other people. Don't blame it on what's happening in the economy. Don't blame it on the government. Just learn and take accountability and try to take and elevate yourself to the next level. So that's it for now. This is Marvin Germo. I hope this video helps you. By the way, we have 2 other videos after this. I hope this video helps you. Trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.